Good morning and welcome to the SERINUS Energy PLC Annual Results Investor Presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Just click Q&A, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Calvin Brackman, VP of External Relations and Strategy. Good morning, sir.
Hi, good morning. Good morning, everyone. Thank you for attending the 2024 Annual Financial Results Investor Presentation. Unfortunately, Jeffrey Auld was unavailable today due to unforeseen delay in travel. But I'm joined here today with Vlad Ryabov and Stuart Morrison, our CFO and COO, respectively. And I'll start off with the presentation. As many of you know, we're an oil and gas company with assets in Romania and Tunisia, producing assets. We have multiple investment opportunities for organic growth funded by existing production and cash flow. One subsequent event that has happened was on the 12th of February, 2025. Romanian courts ruled in favor of SERINUS in awarding us $1.7 million in unpaid VAT refunds, and as well we'll get $800,000 in penalties. The company remains debt-free, and capital investments in 2025. The first one is the Sabria-1 sidetrack in Tunisia. With this slide, this just gives an overview of our assets in both Romania and Tunisia, and highlights the growth opportunities. Now I'll pass it over to Vlad to go through the financial results. To Stuart for the operational highlights.
Thanks, Cal. Production for the year averaged 555 BOE per day, mostly from Tunisia. The shallow gas field in Romania continues its late life decline, which is as expected. Tunisia was largely flat on production, went down a little bit. We had some downtime with a couple of well interventions to replace pumps, those pumps in a couple of wells. So we actually did those pretty well. We came in under budget and under time on those, so pleased with how those went. And the pump performances have really come on in the last few years. So both of those pumps were almost 4 years old by the time we took them out, and that's a lot better than we were doing a few years ago. So Schwesh is performing pretty well. On Sabria, the main focus is on the West 1 sidetrack and installing artificial lift in that well. We've got everything ready for it, and what we're waiting on is another operator finishing up their program, and then we can get the rig onto the job. So that's a fair old production hike that we would be expecting from West 1. In Romania, we were in another exploration period. Now, just to emphasize that the Moftinu gas field area, which is quite a large area, has been declared a commercial area, and the rest of the concession is an exploration area. We are reprocessing some 2D seismic as part of our commitment, and we're designing the program for acquisition at the moment for further 2D seismic acquisition. If we go into the next phase, then there's a work commitment of 1 well without a specified horizon or depth. It's just 1 well. In Moftinu, there are bits and pieces that we can go after, what I call behind pipe volumes that haven't yet been completed and produced. So there are some other bits and pieces with which we could extend the Muffatino field, but it is getting towards the end of its life. And Canar is our water injection well, where we repurposed an exploration well into a water injection well, and that has paid for itself multiple times just in savings from our water disposal costs. I'd like Vlad now to go over the financial results.
Thank you, Stuart and Colvin. I will give an overview of the group's financial performance during 2024. For the 12 months of 2024, revenue was 15.4 million compared to 17.9 million in 2023. That reflects our production of just over 203,000 barrels of oil equivalent in Tunisia and Romania during the year. Gross profit for the year stood at 1.4 million. That is down from 2.5 million in 2023. Equally, EBITDA reduced to 1.4 million compared to 2.1 million in the prior year. Despite lower revenues, we maintained operational discipline. Funds generated from operations totaled 1.1 million. That is down from 1.9 million in 2023. A key positive development was a reduction of G&A expenses throughout the group, which decreased to 3.4 million, or $17.12 per barrel of oil equivalent, compared to 4.9 million, or $21.39 per barrel of oil equivalent, which was last year. Our net loss for the year improved to 2.7 million compared to 13 million loss in 2023. And that is post impairments, which we will cover in the next slides. On the capital side, capital expenditures totaled 1.1 million, significantly lower than 5.5 million in 2023. This was entirely incurred in Tunisia, while no expenditures were recorded in Romania. For the 12 months of 2024, we realized an average net price of $77.31 per BOE, which is broadly in line with the realized price of 2023, which was $77.58. Our realized oil price was just below $80 a barrel, slightly higher than the realized price in 2023. In 2024, we had $79.92 per barrel, and in 2023, comparable price was $79.85 per barrel. Our realized natural gas price was $11.39 per MCF. That is down from $11.94 per MCF in 2023. Looking at operating netbacks, the group reported $27.07 per BOE compared to $33.89 per BOE in 2023. That reflects on Tunisia's operating netback of $33.09 per BOE. That is lower than $40.35 in 2023, predominantly driven by the operating expenses, which we had to incur in Tunisia to maintain the production and the lower production itself, due to the various factors which Stuart already covered on the previous slides. Romania's operating netback remained negative and comprised $37.39 per BOE. In terms of the oil liftings, we completed 3 shipments in Tunisia in 2024, with the most recent being 37,758 barrels lifted in December 2024. The cash proceeds of $700,000 were received in January 2025. That is net of 2.1 million in the monthly prepayments, which are getting from the trading partner. Our next lifting is now planned for June 2025. And finally, we close the year with a cash balance of 1.4 million. That is slightly up from 1.3 million at the end of 2023. Now on these slides, we've got the graphics covering the revenue, cost of sales, net losses, and gross profit. Starting with revenue, we reported 15.4 million for 2024, compared to 17.9 million in 2023. The decline was primarily due to lower production in Tunisia, and even though the production was overall stable during 2024 in Romania, when compared to 2023, the production in Romania declined, and as Stuart noted on previous slides, that's due to the natural decline and the life of the Maftina field. On the cost side, cost of sales decreased to 10.3 million. That is down from 11.4 million for the last year. This was driven by lower windfall taxes, royalties, and depreciation, which more than offset increase in the operating expenses. As a result, gross profit for the year came to 1.4 million compared to 2.5 million in 2023. Moving on to impairments, following our year-end impairment assessments, which were focused on Tunisian assets and Romanian assets, we did identify various impairment triggers, which were discussed internally and with our auditors. And as a result, we concluded that our Tunisian assets remain unimpaired. And the assets in Romania, we recorded 1.5 million for Maftina gas field. And we did review our exploration and evaluation assets as well, which are kind of falling under the separate standard within the IFRS framework, and recorded 4.2 million impairments on the Sankrai 1 well, which is within our E&A assets. And the Sankrai 1 well has been suspended. It was drilled back in 2021, has been suspended, and we now plan to abandon it entirely in the near future. Finally, our net loss for the year improved to 2.7 million, compared to 13 million loss in the 2023 as a result of all of the factors we have just discussed. In 2024, our average production was 555 barrels of oil equivalent per day, with the total production being just over 203,000 barrels of oil equivalent. Romania contributed 55 barrels of oil equivalent per day, with the production declining due to the natural declines of the Maftina rates. Currently, only one well is producing, while 2 wells are waiting recompletion to access behind pipe volumes. As we have numerously mentioned in the previous presentations, we remain debt-free. We are accruing cash for our capital expenditures. And with the cash now potentially, hopefully, will be arriving from the VAT refunds, we do plan to inject it into various capital programs in Romania and Tunisia. That will allow us to recomplete the wells and access behind the pipe volumes. Tunisia contributed 500 barrels of oil equivalent per day. Production was slightly lower than in 2023 due to downtime from well workovers and installation of new pumps in Shuash oil field. Turning to realized pricing, our group average realized price of $73.31 per barrel of oil equivalent. That is compared to $77.58 of barrel of oil equivalent in 2023. This reflects a slightly lower realized gas price, which is more than offset the higher oil prices in 2024. In Tunisia, for instance, our average crude oil price was $79.92 per barrel in 2024. And in Romania, our average gas price fell to $10.72 per MCF. Now, on these slides, we will look into the production expenses and operating netbacks. In 2024, our total production expenses were 8.1 million. That is slightly up from 8 million in 2023. Tunisia accounted for 6.4 million or out of the 8.1 million of the total production expenses, and Romania accounted for 1.7 million. On a unit cost basis, our production expenses averaged $40.81 per barrel of oil equivalent, with the Tunisia at $35.38 per barrel of oil equivalent, and Romania at $98.87 per BOE, reflecting effectively the impact of the lower production in Romania. Looking at operating netback, the group achieved $27.07 per BOE. That was influenced predominantly by the lower production volumes in Tunisia and lower gas prices in Romania, which offset the benefit of slightly higher oil prices in Tunisia, where our average realized price was $78.51 per BOE. By region, Tunisia reported a netback of $33.09 per BOE, and Romania's netback was negative at $37.39 per BOE, again reflecting the higher costs and the weaker gas prices and lower production. In 2024, our total capex at the group level was 1.1 million, all of which was allocated to Tunisia. Looking at funds generated from operations, the group generated 1.1 million with the contributions as follows. Tunisia contributed 4.9 million. Romania net outflow of funds was just below 1 million and stood at 900,000. And at corporate level, we used 2.9 million to cover the G&A costs. And finally, EBITDA for the year was 1.4 million compared to 2.1 million in 2023, reflecting lower production and pricing pressures in certain areas. And stepping back to the capital expenditures, the capex which we incurred in Tunisia was all in preparation for the planned capital expenditures and the W1 sidetrack, which we plan to undertake in 2025.
Okay.
I will just hand back to Stuart.
Thanks, Vlad. On environmental and safety, we continue to focus on this, and we also continue to maintain a very good record, which is down to a lot of work that the guys in the fields put in. On fugitive emissions, Moftino is still pretty low on that because it's a pretty new gas plant. We've installed solar panels to reduce grid consumption at Moftino, and we have for a long number of years audited our emissions and had third-party inspections of all of our operated assets, and we go above and beyond the local requirements for that. So we're maintaining that proud record, and we look forward to maintaining it again in the coming year. So, Kelvin?
All right. Thanks, Stuart. Thanks, Vlad. I'll just provide a summary of we continue with stable cash flow generation. We have a large asset base that we hope to exploit going forward and grow production and use really the funds from cash flow to do so. Our capital plans are all the long lead items for the W1 sidetrack in Tunisia or in the country. We are planning starting the plan for the Wind 12 BIS artificial lift installation to follow the W1. And in Romania, we've done the block-wide geological and geophysical study. The company is planning a 2D seismic program and targeting the best oil and gas exploration prospects. We think there's a lot of potential still, and we're working, and hopefully 2025 will help us start to realize it and grow the company. Thank you.
Fantastic. Thank you very much indeed for your presentation. Ladies and gentlemen, do please continue to submit your questions just using that Q&A tab situated on the right-hand corner of the screen. Just while the team take a few moments to review those questions submitted today, I'd like to remind you that recording the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Guys, as you can see, we've received a number of questions throughout today's presentation. Thank you to all the investors for submitting those. Could I please ask you just to click on that Q&A tab where appropriate to do so, read out the question, give your response, and I'll pick up from you at the end. Thank you.
Okay. The first question is, what is the expected net production increase from W1 sidetrack and the N2 dewatering, and what stage is this? Stuart, do you want to tackle that one?
Yeah, pick that one up. The net production increase from West 1 is of the order of 350 to 400 BOE per day. Of course, that's an initial rate, and with our fractured reservoir, we'll see how that progresses. N2 is dewatering too slowly. What we need, the the reservoir in the region of N2 to do is to produce more quickly from the fracture system and dewater the fractures quicker, which will then cause a pressure drop, and the oil will expand from the matrix, which is the solid rock part of the reservoir, into the fractures and out. So what we need to do there, I think we mentioned it before, is have some treatment of the well to stimulate it, combination of solvents and acidizing. The difficulty we've had is getting that prioritized with our partner. I think it's fairly clear what we need to do, but getting them to agree to prioritize it, I think they're a bit reticent on that. But we continue to work. I'm confident we will get that done.
Okay, thanks, Stuart. Next question is, when do you expect to receive the Romanian VAT refund? As I mentioned on the first slide, on February 12th, we were awarded the VAT refund in the courts, and that ended ANF, the financial authority of Romania, had ended their ability to appeal any further, and that was a final decision in that case. Romanian law allows for 45 days for ANF to pay the VAT refund back to us. Once they've been notified, that'll be a couple days after February 12th with the official notification. What is the likely capital spend in 2025, assuming you get your rig slot? We are proceeding with the W1 sidetrack with our partner. Having all the long lead items takes care of a significant portion of the capital spend. Now we just have to execute the drilling program. And the third question is, does entering the second extension phase on Satu Mare concession depend on the outcome of the Romanian elections? And that answer is no. It does. The Romanian elections has nothing to do with it. The next question. Let's see. With a netback of $33 per BOE and assuming 100 BOE per day of incremental production to keep numbers simple, is it fair to say annual profit would increase by 1.2 million? Well, actually, if we increase production, we're hopeful that we'd be able to increase our netback, given that we have fixed operating costs in both Tunisia and Romania, that we would lower the cost of sales per barrel in Tunisia. So we'd hope that would increase more. Next question.
Just to add on this one, Carl, there are various factors which are outside of our control here, like commodities prices. It really depends on what the commodity price volatility will be in the next 12 to 24 months. And that will have a direct impact on our netbacks, both in Tunisia and Romania.
Yeah, absolutely. A lot of moving parts in there, but all things being equal with our netback in 2024, if we increase production, we should increase. And let's see. Some of these we've already answered. What will the Wind 12 artificial lift add to production? Stuart, do you want to handle that?
Yeah, sure. I mean, Wind 12 is the big prize we have here. It's our biggest producer currently. It's been doing very well. It did a bit better than forecast in the last year. What we'd be looking at is, we just have to do mental arithmetic, is about 850 to 900 BOE per day net is what we'd be looking for Wind 12. So what we need to do there is demonstrate the effectiveness of the artificial lift in West 1, and then then we can apply it to Wind 12.
So, thanks, Stuart. I think that ends the Q&A session, and I'll pass it back to you.
Fantastic. Thank you very much indeed for taking those questions. Of course, any further questions the company receive can be reviewed, and we'll publish responses where appropriate to do so. Before redirecting investors to provide their feedback, which is particularly important to you, Calvin, if I could just ask you for a few closing comments, please.
Okay. I just want to thank everyone for taking their time to join the call today. And we look forward to 2025 and making investments that we hope will grow the company and allow us to even grow more into the future. Thank you.
Fantastic. Thank you for updating investors today. Can I please ask investors not to close this session, to be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete. I'm sure it will be greatly valued by the company. On behalf of the management team of SERINUS Energy PLC, we'd like to thank you for attending today's presentation. That concludes today's session, and good morning to you all.